Hello and welcome to the Cryptocurrency News channel. So we know that Bitcoin did a big dip yesterday and there were a lot of liquidations of leverages, especially leveraged longs. So because of that, on the technical analysis from now on, we're not actually going to look at TradingView because TradingView's longs and shorts only display margin longs and margin shorts. They're not the actual number of longs versus shorts. But now we actually have a movement here on a BTC long short ratio at coinglass.com/long short ratio. For that long short ratio, we're actually going to be using this. You can see the 50% margin right now on the longs and shorts at this point, and it's actually fairly even on the longs and shorts. I think the longs have it by just a little bit, so there's still more people that are bullish than bearish. As you can see, Bybit is extremely bullish, whereas FTX and Kraken especially is very, very bearish. I'm not really sure why people on Kraken are so bearish, but people at Bybit are extremely bullish. So I think these Bybit traders were the ones that got screwed yesterday if they were that bullish. I think if you go down the line at 50%, like this is pretty close to 50% as it is, I think the bulls still have it. The Kraken thing kind of balances it out, but outside of Kraken, people are fairly bullish about Bitcoin. Once again, not sure why Kraken isn't very bullish about Bitcoin. What do I think? Bitcoin's at 49,000 now, which is about 1,500 more than what it was yesterday when I did my last stream. So based on that, I think we're recovering very, very quickly. We will have to see if we can break 50,000. If we can break 50,000, I wouldn't be surprised if we're testing 60,000 again next week. I think they did actually do a lot of long liquidations on that sudden drop, and that basically cleaned out the slate. Now, there is still worries about Omicron, obviously. There's still definitely worries about like Omicron and also worries about Fed tapering. I think the Fed tapering thing is the main thing that actually had the markets down, not just the crypto market, but the stock market as well. But honestly, how much tapering can they actually do? Like, how high would they actually raise their interest rates? I don't really think they would raise them above 2%. And while that would squeeze the money supply, 2% on a historical level is still very, very low. And I don't know how much more balls they would have to do more tapering than that, because I'm pretty sure the executive branch will not want them to do much more tapering than that. Remember, like Trump basically like told them you're not going to do tapering at all, when they actually should have. Well, it's not really tapering. Like Trump basically said you're not going to raise interest rates at all. You're going to keep it at zero when they should have actually raised it a little bit towards the beginning of his term. But I don't really know how forceful the Biden administration will actually be on that. So essentially, I don't really see interest rates coming above like 2.5. So it really shouldn't be that bad. And they do really need to do it to actually control inflation because they have printed a lot of money in the last 2 or 3 years or so, especially through COVID. So that's actually necessary to be done, but it will actually cause somewhat of a recession. Crypto should bounce back harder from that than and faster than other assets because a 2% interest rate is still nothing compared to the yield you can actually get from DeFi farming and also just like staking. Obviously, it really depends on like Congress as well and the rules they pass on that. But I think Janet Yellen actually said like DeFi operators and protocols aren't subject to ISR reporting. So that's actually a good thing. So to me, roughly, like if we actually go over 50,000 like tomorrow or early Monday, there's a good chance we'll test 60,000 again because like blowing through the 50Xs are going to be pretty easy because I don't think there's that much resistance there. Right now, it's just getting above 50,000. And I think before the longs and the shorts, it favored the longs a lot. Now it's more even. So there's not as big of a push to actually liquidate. As you can see, like it actually moves a lot on the long short ratio. Now there's actually a lot more shorts. So essentially right now, I think there's much, much less incentive. I think there's actually like much, much less incentive. Let's actually look at the 12 hours for more stability. If you look at the 12 hours, like it's pretty even. So like right now, I think there's just like much, much less incentive for them to actually try to liquidate again. And I do think we are actually going to go up. And if we go up now and after it's balanced out, we could go past the all-time high of this month. Obviously, like I don't really believe in Plan B's 135K, but I think like 60, 70K is definitely still in the cards at this point, or at least 70, 80K or something like that, because we can go up really, really fast. But I wouldn't bet on it because the Fed tapering and obviously raising the interest rates does have some people scared. As for the TA, the technicals are going to be pretty strong sell. I actually disagree with the oscillators. I would say the oscillator is actually favored buy because the awesome oscillator honestly is more negative, but it hasn't really crossed zero or anything. The momentum honestly, like because of yesterday, is obviously negative, but the commodity channel index is negative 272. And that's like extremely, extremely oversold. Whereas the RSI and stochastic, they're neutral, but they're bordering towards the oversold status. And the average directional index is 23, which honestly does not mean all that much. It means it's fairly weak in terms of correlation. So like I see this as more of a sudden, like a sudden scare, sudden down, like a sudden downward movement rather than an overall trend. So I actually expect it to actually recover because of the commodity channel index is so negative now. The averages, obviously, they're going to scream sell on the daily. And that's mainly because it's so heavily weighted towards yesterday. When you have like on the daily, when you have like a sudden drop or a sudden rise, it's always going to scream sell or buy. But if you look at the RSI and the stochastic and the commodity channel index, I think it is actually oversold and there is a good chance for further rebounds. Remember, we actually rebounded by about 50% of all the dump yesterday. Right now, let's just see if we can get past the 50,000 marker. On the weekly, you know, like for the first time, the weeklies actually indicated sell. And obviously that's because like these moving averages are lower than what they were yesterday. Now, the way TradingView looks at it is they actually look at the moving averages compared to what they were yesterday. I look at like the exponential over the simple for the same day or the same time period as kind of like my indicator. Obviously, like short-term 10 weeks, sell. But if you look at 20 and 30 weeks, it's still kind of a buy for me. And the stochastic RSI are neutral, so is the commodity channel index. Average directional index didn't really do anything. So on the weekly, it was much less affected. So on the weekly, like right now, like if I were in the market to be buying and selling, which I'm really not right now because I'm just holding, I would actually buy right now on the weekly because I do think there's a more chance for recovery than like further dip. There is like I would give it like 65-35 or 60-40 in terms of like a recovery or dip. I do believe like if we do clear 50,000 and we don't get pushed back down, we will actually be at 55-60,000 by the end of the week. Otherwise, if we get pushed down, we can actually go into the lower 40s again. So that's where I'm at the weekly. On the monthly, they are still looking at a buy right now. On the monthly, none of these things have actually really changed. And I think like I said, December is generally a buy month for me. Although I'm less certain this December because of Jerome Powell's like tapering and also because of Jerome Powell's interest rates. So we'll have to see how the market reacts. I think it's going to be kind of correlated with the stock market, guys. I think this is one month where we might be pretty correlated with the stock market, especially if the stock market moves because of Powell or Yellen's movements. So I would actually be watching CNBC. I usually don't watch CNBC for like crypto stuff, but I would actually be watching CNBC and what signals that like the Fed chairman and the secretary, like the Treasury secretary actually gives us, you know, because I think those are going to affect like the entire market structure, both including crypto and stocks more than before, because like these like tapering movements, the interest rates, and what like Janet Yellen says about like certain crypto, says about like the crypto market, and essentially what she says about regulations and stuff is going to matter a lot. So I think like looking at CNBC, looking at how stocks are reacting to all this stuff, I think is a good way to actually look at it. So I would say like right now, I'd be like 60-40 in favor of buying because I think there's more of a chance that we'll actually recover than go back down. So that's what I have to say for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.